All right, guys, welcome to the Investor's Guide to Memphis Real Estate. I am Dean Harris. This is Douglas Skipworth. We are bringing you the podcast to give you the boots on the ground knowledge to be a successful real estate investor here in Memphis, Tennessee. I help buyers and sellers every day buy investment properties, anything that you guys need help with from buying and selling here in Memphis. Shoot me an email, dean@CrestCore.com. Man, today's show, let's dive right into it. Today's show, we're talking about buying rentals and
now.
Why aren't you buying them now? We have several different headlines, but my biggest one was not buying rentals. Why not? Why aren't we buying rentals right now? What's the first thing that pops in your head? What's the scare tactic that people are hearing?
High interest rates.
High interest rates. Can't get a deal.
And recession's coming.
Recession. We're in it, buddy. We're in it. It ain't coming.
It might come in 2023.
What they're saying is it might get worse.
It might get worse.
We're in it now, whether you want to acknowledge it or not. So to me, it's like, hey, why aren't you buying now? They hear, man, the interest, because I hear this every day.
Yeah.
The interest rate's high. I can't make the deal work. The pricing's too high. And in a lot of cases, maybe that was
the crash is coming.
Yeah.
I'm waiting. I'm sitting on the sideline waiting. Yeah. I'm going to be ready.
I got news for everybody listening now. If you're waiting on 2008 and 9, that is not happening.
Two things. There is a crash. There is a housing crash.
Yes.
It has happened.
Yeah.
And it is a crash in number of sales taking place.
Yeah.
Okay.
There you go.
That's the crash.
There's the difference.
There is not going to be, and this is the key, there's not going to be a housing crash in price.
No.
That's what you're saying.
Yeah, 100%.
So
that's
yes,
what I'm
there
saying.
was a housing crash. Like, newsflash, there has been a housing crash.
Yeah.
The number of sales has dramatically decreased by like 25%. So, I mean, like, it has decreased.
I would even, in some cases, more than 25%.
But prices have not decreased.
No. And
they will not decrease to a dramatic extent such that people can have.
Or all of a sudden coming out of here going, wow, at these steal deals.
Yes, that is not coming.
No, I don't in any way, shape, form, or fashion think that's coming. So if you've been listening and you're tuning in, I don't believe it either. I do, with what we've said, we'll see some settling.
Sure.
You might see a little price reductions, but the demand log, the backlog of demand was so long and still is. Houses are selling. I had a duplex come up today. Well, I just told the story before we started this. I had a duplex come up today. The guy asked me for 2 days questions about it. It's fine. We answered all the questions. It's gone. Because it was a great property in a good area and it's gone. And it was priced right and it's gone. So things are selling. They're just not selling at the pace that they were.
Correct.
Okay.
That's right. That's where the crash was. At the pace of selling.
We're doing.
Everybody was sprinting and now they realize they got a lot more laps and they're like, okay, we're going to have to slow this pace down.
Yeah.
But they're still running the race.
You said something yesterday that caught my attention. You were like, I'm thrilled I'm a property owner right now.
I'm thrilled. Now, I mean, this to me, yes, it goes back to that old story about when's the best time to plant a tree.
Yeah.
25 years ago, the tree has blossomed and, it's full, mature. And so the next best time is today. It is a great time to be a landlord.
Yeah. And let's talk about why. Because people might be looking at us going, what, why?
We're in the middle of a recession.
Why are you saying all that? We're about to tell you why.
Man, now is a great time to be a landlord. That is my experience. Like, the life I'm living right now is like, this is a great time to be a landlord.
Even during the 1920 free-for-alls, my portfolio wasn't as tight as it is now.
The 1920s, what did you say?
2020.
Gotcha.
Yeah.
I was like,
my bad.
That's good. I was like, man, but going back to the stock market crash, the Great Depression. No, you're just talking about 19 and 20.
2019 and 20.
Yes. Gotcha. That's good.
My portfolio is tighter now than it even was then when all the hoopla was going on. So let's talk about why. Why are you excited today to be a landlord or an owner?
So, if you boil it down to the three headlines are rents are higher than they've ever been.
Mm-hmm.
Occupancy right now is sky high.
Mm-hmm.
And collections, believe it or not, is sky high.
And I love what you're going to back this up with. I'm going to let you say it.
Yeah.
You've been in this double the time 20, I have from an investment standpoint, double the time I have.
And so I've seen
holds true.
I've seen two economic crises, the Great Recession and COVID. And this is number 3. Yep. And I didn't know what it was. every time, this is different, but there's certain things that I've experienced that are always the same, at least in those three over that 20 plus year since 2002. And that is renters always prioritize in tough economic times. They're smart people.
Because they
like
have
renters
to.
aren't dumb. Like
No.
the renters are smart.
Yes.
Like, and they are good. A couple of bad apples spoil the bunch, but the overwhelming majority of renters are awesome. And we're here to help them and to provide a good place for them. And they're smart. And so what they do in economic times is they prioritize four things. Their housing.
Yep.
The utilities for that housing.
Yeah.
Their transportation.
Yeah.
And their food.
Yes.
Everything else is discretionary.
Yes.
So what we experience in the Great Recession as landlords and what we experienced during COVID as landlords and what we have been experiencing right now during this rising interest rates, maybe a softening of the economy, definitely a softening of the economy, maybe a softening of the job market, different things. We have seen renters who are prioritizing those four things. So guess what? They're not moving out. They're renewing leases. They're paying their rent on time, every time. Like, this is a really good time. And the tailwind that we got from the past 3-4 years is that rents are now significantly higher than they were 5 years ago.
To piggyback on there, this summer, early summer, late spring, early summer, I was averaging in my portfolio about 20% vacancy. Because I was adding them and I just had a lot going on, right? And now we're down to 4% during a tougher time. In the spring, we were hot dogging it with houses, and there was no early spring. I'm talking March and April. I mean, the rates hadn't really begun to rise up. People were still going with houses, and I had way more vacancy. And now that we've come down to this part to almost prove what you were just saying, I got way more occupied. I don't have any turnovers right now. I have just a couple of vacancies that you would have with a portfolio my size.
Right. And people are paying.
And people are paying.
And people are working. COVID, obviously during COVID, they got a lot of stimulus money. And there was what we've seen that has also been another little bit of a tailwind for everybody is there was millions. I don't know if it was billions. It had to have been billions. I don't know the number. But it was millions in Tennessee and millions that got allocated to Memphis of federal rental assistance money.
I benefited a half a dozen times.
Oh, yeah. Tens of thousands of dollars.
Yes.
I mean, the property management company that here at CrestCore, they have had, and they manage a lot of properties, but they've had tens of thousands of dollars of rental assistance for tenants who life happens, hard times happen, and they were able to catch up. So almost everybody has been able to catch up.
Yes. And pay their rent.
And now they're in an economic hardships, a harder time. So they're going, I don't need to go to the movies. I don't need to go on that vacation.
I don't need to buy groceries and pay gas and
keep my utilities on and get to work. And I need to keep a roof over my head. And as you know, as money was flowing fast, they had money for down payments. They had first and last month's rent. They could shop around. They could increase their, things on the market. We talked about this in raising rents. Like there's no doubt you can stay in a house for cheaper than you can go out and move into a new one because the landlords are going to give you a market discount.
I have several times, instead of going up to where I saw a house down the street, $100, if they agree to stay, I'm going to let them stay for their rent. And countless other investors are doing the same thing.
Of course.
Because we don't want the turnover and we don't want the vacancies now.
Especially if you look back and you had a tenant who's been paying.
And neither does the tenant. They don't want out either.
And they don't want to go down the street and pay more.
No. And why move and why go through that headache? Now, last year at this time when money was flowing and deals were going, and I mean, that's why I had those higher vacancies. And it was a little more stressful, and everybody
did.
So
across the portfolios. And
that's right.
We track other we track the market and watch what other property management companies are doing.
Yeah.
And it was across the board. It was a market thing.
So even in my notes here, collections are at an all-time high. I mean, that and that's not, I mean, that's factual. I mean, I guess we could give percentages of here what they are, but I mean, occupancy is at an all-time high. I mean, these aren't just opinions of ours. These are facts based off the property management division here, our colleagues and competitors that we're researching out. Everyone is experiencing the same thing in Memphis.
And again, when I turn, I'm most of the time, we're looking like this, just kind of, and then, but when you kind of step back and you look at the kind of the broader history, and you go, oh wow, look, this is exactly what happened in the Great Recession. Yeah. Everybody was worried, and it's like that was the best time.
Yes.
And then during COVID, we were all worried, and that was the best time for renters. Everybody hunkered down and paid their rent, and then here we are looking again. Now, this is probably, I didn't even think and recognize it until I could do it a couple months, October, November, and go, wow, this has been awesome.
Yes.
Yeah. So, I mean, the occupancy I've seen is historic for me over that 20 years in some of those areas. It's just been amazing.
So to go off of all that great news to be an owner, if
and the rents are higher,
and the rents are higher than what they've been.
You can't forget that. And I think we had, and again, just a kind of a quick aside, that we had a few weeks ago, we talked about being able to raise rent is a superpower of real estate, is being able to raise that rent.
Yeah.
And we got a comment on some social media about, it was like, WTF, raising rent is a superpower, like putting it down, holding down the renters. And we're like, no. That is not what we're talking about. We're talking about adding value to renters, providing a service, providing housing. So this is something that this is a superpower because it keeps up with inflation and you're able to keep pace with the market. It is a good thing. So rents now are as high as they've ever been.
And this is a real estate investor show. This is not a tenant show. You know what I mean?
No.
And I'm not saying we don't care about the tenants.
No,
because we certainly do. But what I'm trying to teach everyone here is how to be an investor.
How to be a good investor.
And the right way to buy the rentals and invest is if you can take a market rent increase, you have to. I think you're obligated to, for your business sake. Now, there's always that one thing, but yes, I hear you.
So anyway, all that to say, it's again, you're gonna have haters out there and stuff, but it's a superpower. And I guess part of what I was saying that was like, with a superpower, like you can steward it. There are superheroes and they're villains.
Yes.
You know what I mean? And we're trying, I'm not saying real estate investors are superheroes, but I'm definitely saying that you can steward the resource, the opportunity for good. Yes. And that's what raising rents can do for the investor. And again, this is just a time where to kind of circle it back. It's like, well, I am so thankful that I'm an investor right now.
Big time.
I am so thankful because it's like, this is the time where you're like, it's like you have an umbrella and it's raining and you're like, I'm so thankful I have an umbrella and I'm not scrambling to find an umbrella but that's part of what we're saying is like, if you don't have an umbrella, now's the time to get one.
Now's the time to get one. I'm not having,
because it's going to keep raining. Like these times are going to be good. They're not going to change.
No.
Rents are not going to go down.
No.
Occupancy is not going to go down. Renters are not going to quit paying. This is something that we've seen and it keeps repeating itself.
So to answer the big question, those are the reasons why we're excited we own portfolios now. What else? Why else would you buy now? What else comes to mind when we talk about why aren't you buying them now?
What comes to mind of why people aren't, or why is now the time?
Why is now the time?
So a couple of things that jump in ahead of me. It's just I'm always trying to read and take in information about what folks are saying. But so I'll talk to one about just the demand that's coming. But then number two is just, which that drives something that we talked about this the other day. Mm-hmm. I did not plan for appreciation.
Yeah.
I did not plan for rental increases.
I didn't either.
When I was trying to be conservative.
Yes.
I was trying to
Most are. 95% of the people watching this are.
Which is great. And that has gotten us very far in life.
Mm-hmm.
But I could have been a lot farther in life if I wasn't too conservative. I was too conservative. I was too scared.
Why do you think that was? Because you were reacting to the now?
Yes. Yeah. I didn't study the economics, the macro, and I know it's hard to prognosticate and forecast and look out there with the crystal ball and say, here's what's going to happen. But like, so all that to say is like appreciation and rent increases, they've tapered right now, but they will come back. And one of the reasons is that demand. And it's just like, we all know, I mean, we heard it for years. Thankfully, we're not hearing it as much about the millennials. The millennials are great. They are the biggest, they're the biggest cohort ever.
Yeah.
And guess where they are now? Prime time buying, renting, investing.
Driving the market almost.
So it's like, it's not like we're losing renters out of the pool. We're putting renters in it.
More.
Especially now, especially right this second when interest rates are high and it's hard to buy a home. Like people need to rent homes. So the rental demand is still so strong.
Yes. Two things I wanted to add to that. Do you remember me telling you the story of and I'll say it quick because I have told it on here. Remember the stockbroker from New
Yes,
York,
of course.
Nashville?
Harvard guy.
Here? Yeah, Harvard guy. So I'll tell the story real quick. Very successful in his 20s.
Yes.
Super successful on Wall Street. Moved to Nashville, bought some rentals there. Last year came to me and started buying them here early, like January, February. He was paying $220,000 and $250,000 for some houses that rented for 17 and 1800.
Why is he doing that?
And I want to piggyback on your comment. I was guilty of thinking about the now. Right. Even in my sales approach, I was thinking about today, what's a good deal today? And that's really all I was focused on. And then he started talking about it. He goes, well, Dean, why are you so down on this? I go, man, I'm not down on this property. I go, the area's great. There's a lot of positives. I said, but for $230,000, I feel like we could get a little more rent or something else with there. He goes, well, let me ask you this. And I'm not coming at him at a know-it-all standpoint, but golly, he's in his 20s and I've been doing this for 20 years. So this is why I like this podcast, because we're very honest. Like, so for sure. So I'm sitting there and I'm like, tell me what you're doing. He goes, well, Dean, after all my research, and he went through this whole thing, and I'm thinking, well, golly, how much could that possibly be at his age? But he goes, even if we took an average 3% increase for the next 10 years, he goes, some years we might not see any. You just
right now.
Some years we might see 6 and 7%.
2 years ago.
And some years we might just 1%. He goes, but over a 10-year stretch, if you look back at rental history, we go up about 10% 3% every year. Yes. 30% every 10 years. He goes, so Dean, do your rent. He goes, it was an $1,800 rental. What is that? $3,600, $540 more. So now we're looking at a $2,300 rental.
On a $230,000
on a $300,000 house because it appreciated. He goes, so now if that's $2,200 in rent and a $300,000 value house, are you more or less happy about it? And I was like, man, what a jerk. I go, I got no other thing to say, but I'd be more happy about it. I was like, he goes, that's why I'm buying these. He goes, because I'm looking to hold these for 25 and 30 years because of my age and da-da-da-da. And I was like, fair enough. On, man. Keep going. I go, because I now that you spell it out just like that, and I think about it like that, yes, the home, because they're all in Cordova, what he was looking at, all awesome. Great areas, right? Brick, 3.2s, all the other stuff build, that new builds, relatively new 20-year new builds, which relatively. Is new. You want all that,
yes.
And I was like, man, I'm. That's great. I go and thank you for sharing that way of thinking. Us. And then he went through that, and that's kind of what we're saying now. You might not be buying. And again, I'll say this too: we're marrying the house and dating the rate right now.
Oh, for sure.
We're going to marry these houses we're buying right now because they're good houses. Yep. We're just going to date this rate for a little while because if it goes up, congratulations, you got a lower rate. If it goes down, congratulations for a couple of grand. We'll refi it and get back out of there, and you're set. So all of these things that we've been talking about in the prior podcast, we're spitting them at you kind of one by one. But if you go back and look at listen to the last 10. You can kind of hear what we're leading up to and building up to, and it's in front of us right now. I think that's what I want anyone to take out of this is we're no longer talking about, hey, what's coming up? Be prepared. We're in it.
We're in it.
We're in the middle of it. Because you're living day to day. The time is now. So don't feel like, hey, I can't buy anything right now. Yes, you can. The rate is a little higher, but we're getting them a little cheaper.
Yeah.
And there's less people involved. So you're not having to do escalation clauses, and we're not overpaying. You're not overpaying
people
for anything.
Could have put, were overpaying.
Oh, Douglas, they did. If we're saying what happened, they
yeah. I mean, you've seen that. You've seen a big buyer buy a ton, and now they want to sell some of them.
Man, I had a hedge fund come back, and they want $260 a door. I got
overpaid.
Man, I can't,
Whatever. So one thing I want to underline again, or underscore kind of that we've talked about is the reason rents increase is because personal income increases.
Yes.
Like everybody's, and people pay, 25 to 50% of their monthly income for rent.
Yeah.
And some people stretch, but the good rule of thumb is a third. So they call it 33%.
I think mortgages do 25, don't they? Is that right?
No, they used to, but I think it's been up as high as 48. So, it's like, it is crazy.
Yeah.
Anyway, all that to say is like, as personal incomes go up, rents go up.
Yeah.
And so that's what we're talking about is that we did not
plan on any of that. You didn't, when you bought 5 years ago, you weren't planning on it.
20 years ago, thinking about cash flow, thinking about being conservative and planning for a rainy day, just worry about the downside. The upside will take care of itself. And it did on those problems.
In 2013, when I started with you, or 12, I'll never forget getting on the phone and saying, man, if you're coming here, appreciation's not really your play. It's cash flow. Memphis is cash flow king. I remember going and saying it over and over and over again. No one planned on it. And it came because you know why? We were in one of those cycles where we weren't seeing appreciation here. But if I'd have known my little Harvard buddy back in 2012,
it's coming.
It's coming. I'm saying the same thing now.
And if you're in the area that you want to be long-term, then it's coming. So again,
couple
we're
of
all
last
saying the same
notes
thing.
here before we're done. When I was talking about deals, I had 4 headlines for deals, and I want to make sure that every buyer hears it. Way less buyers are in the market right now. When I say way less, I mean 60 to 70% less. So I don't mean like, hey, a few mom and pops have stopped. No, sir. 70% of the buyers that have been buying are not buying.
Which is the crash. That's the crash. The buyers have left.
They're gone. And you and I had our weekly meeting yesterday, and I said, hey, our buyers that bought heavy from us in 16, 17, 18, and 19, and even 20, and some of 21 are not here.
Right.
They're afraid of what's going on because they came in under a different set of circumstances, and they're afraid of what's going on. They clearly aren't listening to us.
That's right.
Because I'm telling you now, I can't believe they're not buying. I'm buying. I bought one.
Now's the time.
This past week. Like I'm buying.
Yeah.
Let's buy them. And I'm not getting any killer deal.
I was looking at a deal this morning. I said, this is the deal for me if we can make it work.
I'm not telling you that we're stealing houses. What I'm telling you is that there are deals that are working in our program.
Yes.
Our 20-year payoff, or if you want to do your 30-year, 15, even some that I buy. Way less buyers in the market. Prices, number 2, prices have stabilized. It's official. We're probably 3 months past that. They've stabilized. There's not any more of this hurry buy. It keeps ticking up $2,500 every 2 weeks. That's not the case anymore.
No, and nor are they plummeting.
They're not. They're stable.
This
is just a steady.
They're a crash in buyers or activity, not a crash in prices.
No.
So don't hold out for the crash in prices. I looked at foreclosure data. There's not foreclosure stuff coming in the pipeline.
You know why? Because they didn't loan money like they did in 2008. We keep telling you all that this is not going to happen.
It is not. And not to mention that there are billions of dollars. I don't know if you could say trillions. There are billions of dollars that have been mobilized over the past 15 years that took advantage of that opportunity and now are ready to take advantage of that opportunity. So there's a floor. Like it is not going before, but it's kind of like there are dogs all around here. If you drop a crumb, you're not picking up a crumb.
If prices drop 30% today or over the next month, there'd be people flooding my phones. They'd be going haywire. I'm telling you.
So it's not. So unfortunately, that's not going to happen.
No. Number 3, buyers can be way more strict on their criteria. If you were buying a year ago and you had some criteria and a house was sent to you and it didn't quite match, you either went for it or you didn't get the house, one or the other, right? You had to kind of
all
take
cash above asking price,
or
waiving contingencies,
or beat it. I mean, it wasn't even anything nice or sweet.
No
cash.
They didn't even
price
reply to your email,
which was beat it.
Yes,
the nicest way I can say it on this podcast.
Yeah.
All right. So buyers can be way more straight on their criteria. Banks have been willing to loan. If there's one thing that I have found right now, because banks learned their lesson from 2008, they're not in horrible situations right now.
Banks aren't in bad shape.
No, banks are not in bad shape.
They don't have a lot of bad loans on the books.
No, I had my banker come and ask me the question of, hey, are you comfortable? Is your line of credit good? Do you need, what else can I do to help you? I sent him my flip house last week that had great numbers. Sure, man. Let me know what I'm getting no friction and pushback. So I don't imagine that Memphis bankers are atypical from what others are thinking. So there's probably banks either in your town or where you're from, or even here in Memphis, that you can talk to that are loaning money.
Yeah. And I sit on board loan committee of a small community bank here in town that does a lot for investors. Yeah. Looked at a deal yesterday for an investor.
Yeah.
It's like, yeah. Great.
Sure.
Doing deals.
So make sure that of those 4 headlines, you take that. Number 1, way less buyers in the market. 2, prices have stabilized. 3, buyers can be way more strict on their criteria. And 4, banks are still willing to loan. So we've just laid out today, if you're not buying and you are calling yourself an investor, I think you're doing yourself a disservice. Mm-hmm. You should be buying now. You should be looking at your market that you're buying in. You should be analyzing and talking to your agent. You should be inquiring about properties coming up, and you should be clearing your lines of credits and being ready, or having your cash ready, or whatever it may be. Or you're going to catch yourself in some of these situations that we've talked about of, I wish I'd have done that, or should have, would have, could have. And I'm disappointed a little bit in our, it makes me kind of a moment of honesty here.
Yeah.
I'm disappointed that I didn't do a better job of coaching up the team.
Yeah, I hear you. I think I know what you're saying.
I don't feel like we've done, because of the drop off.
You've got the good news. You've got it, and you hadn't shared it.
And I hadn't shared it.
Got it through, persuaded. Yeah,
we're going to be very vocal here on these these podcasts coming up. I feel like the last one we did, we were talking about this, got a lot of traction about our fireman friend. That
that's a great story.
Yeah, it was a great story, and he's surprised to
creative
see that
financing.
40,000 people have viewed his story.
Yeah, that's right. That's a great.
So he was excited to hear that. But I mean, cool. Stay tuned. I mean, we're going to be helping you get through some of these times of uncertainty, but we're going to be very honest, kind of like we were today. So I'm excited to bring some of this information. If you guys have any questions, Dean at CrestCore.com, do you have anything?
Reiterating what we said, is like, being a real estate investor is awesome. And now is a great time. And now is where you're going, I'm so thankful I'm a real estate investor. It is so good to be an investor. It just reminds you of all of kind of why you're working for it and what you're working towards.
Big time. Because in times that are tough, the machine that you built is still running.
It's so good.
Yeah, I love it. Thanks, Douglas. Appreciate you. We'll see you guys in a couple of weeks. Thank you.